Elaine Kub from the ARC Group is our guest. It's been a relatively favorable week overall. You look at the stock market, we're getting unemployment benefits that match a 4-year low. S&P has reached 1,400 for the first time since '08. Banks are in good shape. And then if we go to the grain side, corn did okay this week, but soybeans really ran away. So what is the diagnosis there?
Yeah, everything like you say, macroeconomically speaking, things are very favorable. If you talk about our customers, China, their economic ability to pay, their futures prices have reached record highs this past week. So this has been a big week for grains, absolutely, and soybeans have been the leader.
China's been in the news for rumors nonetheless, but soybeans, is it time to unload old crop?
Well, I think most farmers with a lot of risk management, some strategic conservatism there, probably have a lot of their old crop grain already sold. What I've been recommending is that guys keep, a few loads around basically as gambling bushels, because I suspect we could be entering another summer, particularly for corn, where it's going to get very tight and you are going to see record high basis levels or record strong basis levels. So I would recommend whatever you're still holding on to, you continue to hold on to, because I don't think that we've seen this rally end yet. There's been no sign that the rally has ended just yet.
You think there's still more space?
I think there might be, and I think of it more in terms of time than as a price level. I think we've got another couple of weeks here before we really start to pay attention to new crop bearishness. So I think there's still another week or a week and a half where we could get another 10 or 15 cents in these markets.
Yeah, speaking of new crop, when is it time to start really thinking about forward contracting out for soybeans?
I've already started some sales earlier this month, and I think it will make sense to look at making some more sales before the end of the month, because we have that prospective plantings report coming up. And especially for soybeans, because they have had this run since mid-February. They have benefited over corn. The price ratio is now about 2.3 to 1 for the new crop contracts. And that's probably a lot higher than it needs to be. I think soybeans are going to receive acres whether they buy them this month or not. I think that farmers are more likely to stick to their usual rotations, stick to what seed is available than the USDA has previously been predicting.
Yeah, planting intentions, March 30th. It's a Friday. How many acres can we put you down for?
Well, I think that the 94 million acre number for corn is much too large. I don't think that there's going to be that big of a change in farmer planting behavior. I think it will be probably closer to 93. Last year we had 92. They will probably gain some because of these prices, but I don't think it's going to be anywhere near as bearish as USDA has been predicting.
And so with that in mind, what do you see in corn for the next 2 weeks then, and probably the week after?
Well, I think that it has been slightly competing with soybeans, that it will probably continue to work toward that $6 level over the next 2 weeks. And if we do get a surprise in that plantings report, then we've got a big rally to look forward to after that.
One thing that's kept rising steadily is gas prices, energy prices, and in so doing, input costs. What do you think is going to happen here? And we were talking before, and obviously it's an election year, so there are things that could happen as we get into September, November. But right now, what do you think for energy prices going forward?
Well, let's look at crude oil as a benchmark for energy as a whole. And I would say that $110 level, $115 level, a lot of that was just risk premium because of the uncertainty about Iran. And we've got a month that we know Iran and Israel aren't going to do anything because they've said they're going to wait till their meeting next month. So it seems like things might just kind of skate along here. And longer term, on its own, energy market has a fairly decent supply and demand situation. We're not increasing our demand as fast as the demand or as the supply is staying constant. So I think that there's some reason for long-term bearishness in oil prices or in energy prices, particularly natural gas here in the United States. But in the short term, gosh, you really don't want to be short in that market because you never know what these Middle Eastern countries are going to do.
If we go back 2 months, where corn and soybean prices are now, are you surprised at the run that they've made, especially soybeans, really?
Yes, very much so. And I think the reason I'm so surprised is because we knew about this South American drought for several months now. It seemed like it was already priced in, and it has been priced in, and nothing new has really happened. This whole run-up of the past month, none of that was new information. We knew they had a drought, and they're just now getting into harvest where we can really get reliable numbers about what the production is going to be from down there. So it's funny to me that the rally just continued, and we had the funds continue to build up more and more of their net long position, but that puts you at a precarious situation. So if something does change, how fast is it going to fall apart?
Elaine Kub from the ARC Group, our guest. Elaine, thanks.
Thank you.